Well, it's been a good week for global markets where pretty much all indices have been in the green. And that continues when we look at Wednesday. All three US benchmarks gained for a fourth day in a row on Wednesday, especially led by tech shares. Alphabet, in fact, rose 7%, which is Google's parent, rose 7% in trade yesterday. However, there was also an announcement on US private payroll data by ADP, which suggested that there was a contraction of 300,000 jobs in the US for the month of January itself versus the anticipated 200,000. So that has come in much higher than expected. When we look at all three indices, they were in the green, as I did mention. The Dow was up 0.2%, the S&P 500 up almost 1%, and the Nasdaq rose 0.5%, led by Alphabet. Well, post-market though, there was a bit of action with Meta, who's Facebook's parent, announcing its Q3 earnings, or rather December quarter earnings, and that meant and that was a miss versus what the street and analysts were expecting, and that meant that US futures have trended lower since. In fact, the Dow futures are down a more tempered 0.1%. However, the S&P 500 futures is down almost 1% as we speak, and the Nasdaq futures is down over 2%, largely, of course, led by a sell-off in tech associated or social media associated stocks, including Facebook being the biggest of the losers at the moment. When we look at Europe, well, European indices on Wednesday closed marginally higher. Other than the DAX, the German index, which is the DAX, closed with a negative bias, down around 5 basis points. However, all other indices trended in the green, with the FTSE up over 0.5% and the Stock 600 up just under 0.5% in trade on Wednesday. When we look at how Asia has opened up in early trade today, it's been a mixed set of numbers that I can see in front of me. The Nikkei is down over 1%. The Shanghai 2 is down almost 1%. But the Hang Seng and the Kospi are holding on to good gains. The Hang Seng is up over 1% and the Kospi is up over 2% in early trade today. The ASX 200 is the only one which is more tempered and is down over 0.5% in trade as we speak. In terms of the SGX Nifty, it's looking absolutely flat in early trade today. Moving on quickly to commodities, well, oil prices cooled marginally as OPEC Plus agreed on a March output rise, and that will see oil prices fall a bit. Obviously, good news for India. When we look at gold as well, that's looking quite stable. The payroll data, of course, put off gold, which meant that gold prices rose a little bit. However, they've tempered since they're above that $1,800 mark, and they're able to hold out over there at the moment, $1,800 an ounce. Moving quickly on to currency. Well, the private payroll data did not help the dollar index, which fell sharply in trade yesterday. However, it's up around 0.1% in early trade today. It in fact was below the 96 mark yesterday, and it's now just above that 96 mark at the moment as we speak. Well, the US 10-year Treasury yields too fell off a bit, largely due to the same reasons. Well, the US bond yields currently, the 10-year yield is at 1.766%. So that's fallen off around by 3 basis points as we speak in early trade. Lastly is, of course, Bitcoin. Bitcoin has fallen 4% and is just below the 37,000 US dollar mark. That's a roundup of how indices are looking in early trade today.